All right, I think we've had a couple of minutes for the latecomers to join us. So I'm really excited to welcome you today to this SWEEP and CDP webinar, where we're going to talk a little bit about the SFDR regulation, which is, in my opinion, really interesting because it's an angle which we usually don't look at when we're talking about corporate reporting. So we're going to have a look at the implications of SFDR for companies, so which is super interesting as said. I'm going to give the panelists a minute to introduce themselves. So perhaps we can start with myself. I'm Guilharme. I've been working at CDP for over 2 years. I am part of a team at CDP that looks at the sustainable finance regulations, and we do capacity building works with companies, in my case. And my colleague Helene is going to introduce herself. She does the work with capital markets. And our work is funded by the European Commission. We have a grant from the Commission, and this is why we do this work. So passing on to Helene, so she can introduce herself.
Thank you. Yeah. Hi, everyone. I'm Helene. So I work with Guilharme in a team focusing on EU sustainable finance. My role is really to focus on the investor side of things. So I work with our investor signatories to help them implement the regulatory framework. And we do that mainly by helping them getting the data they need and helping them on the engagement side as well. I also represent CDP on the EU platform on sustainable finance, where we are working with the European Commission to help on the data usability and implementation side of the framework. Nils?
Thank you, Helene. Hello, everybody. My name is Nils. I've been working at SWEEP for almost 1 year now. At SWEEP, I'm a carbon and ESG finance expert. I'm mainly implementing the product to both our financial customers and their portfolio companies. Over the past 5 years, I've been working in consulting and in banking in sustainable finance topics. And I'm really looking forward for our discussion today with our partner CDP and on how to navigate ESG reporting for investors and investees and how SWEEP can help.
Amazing. So if you can go to the next slide, Nils, please. Yes, so just a short introduction for those of you that are not familiar with CDP. CDP is the organization, a non-profit organization that started the environmental reporting 20 years ago. So we started the system. We've been collecting data for the past 20 years on companies and government's impact on the environment. The way that it works is that we have investor signatories. These are large banks and large investment funds. They sign a letter addressed to some of the world's largest corporations, asking them to disclose this data to CDP. These companies are then selected based on CDP's materiality assessment for the 3 topics that we collect information on so far. So climate change, forests, and water. So we request companies based on their impact in these 3 different areas. The companies disclose this data to CDP, and then CDP pass on this data to its investor signatories. It's a similar case for government. So we have also a program for cities, states, and regions, and they do the same thing, a slightly different questionnaire. One thing that I want to just bring up today is for those of you that are familiar with CDP, we have recently announced that we are reformulating our questionnaire to facilitate reporting going forward. So we're no longer going to have 3 different questionnaires. We're just going to have one questionnaire with the different modules embedded within this one questionnaire. So we hope to really facilitate, streamline your reporting going forward. All right, so pass on to you, Nils.
Yes, so I will give you some insight about SWEEP. So SWEEP is a software company that analyze carbon and ESG data. We help companies to achieve both their climate targets and make data-driven business decisions thanks to our tool when it comes to carbon or ESG. In our product, we mainly map the climate journey of our companies, and we help them scale up their data needs when it comes to ESG strategies, producing insight as well to make them have right data-driven decisions. We have in-house expertise of reputed entrepreneurs and carbon experts that focus on business, tech, and sustainability, of course. And our final outcome is to help companies to take action. I think it's really why we are Sweep, is to make companies take action. So of course we are a gold accredited provider of CDP, and we proudly today together to talk more about the ESG reporting.
Right. So before we jump into the panel discussion, just wanted to briefly talk a little bit about the EU sustainable finance regime. So as you know, it's made of, let's say, 3 pillars. One of them, or the one that started, was perhaps the EU taxonomy, which brings basically a classification system upon which you can classify your activity as sustainable. It was followed by the SFDR and the CSRD regulations. So the CSRD, as most companies are aware by now, at least European companies, is the Corporate Sustainability Reporting Directive. So this is the regulation that basically tells how companies should start disclosing. From 2025, large corporations will start disclosing on a series of different impacts that they have on the environment, and also the impacts the environment has on them. This is the principle of double materiality, which we're going to talk about later on a little bit. And on the investor side, you have the SFDR, which is the investor disclosure regulation. So basically, the regulation that asks investors to provide information on the impacts of their portfolios on the different environmental objectives of the EU. So you have biodiversity impact, climate change impact, impacts on circular economy, so on and so forth. So with that being said, I think we can start with a not so simple question, but nevertheless very relevant question. What do we want basically from this new world with SFDR, CSRD, EU taxonomy? What is the ideal situation that we want to get to? Helene, perhaps, could start.
Yeah, sure. So, I mean, in an ideal world, you'd want data available in quantity and quality to inform all sorts of decision making, right? Whether it's an investment decision, a strategic decision for a company or policymakers. And I would say from a pure investment perspective, risk and returns is obviously a key consideration of decision making. And in an ideal world, you want the consideration of negative impacts or positive impacts on the environment, on climate, reflected in prices. But I think to achieve this, we need data and trusting the data that is being reported. And that means, for example, being able to compare, apples to apples. So ensuring that there's harmonization in definition, common interpretation of this reported data. So I think we really need protocols to assess those environmental impacts, risk, opportunities. So I would say in an ideal state, you'd have this type of data completely integrated into risk models for investors, influencing the cost of capitals for projects, and of course, financial flows that goes to places that need it. And I think there's a big role of private finance and investors to fund the transition. And for that, again, we need data of high quality that is available for them to make that decision and track progress. So I think on the topic of SFDR, of course, the principal adverse impact indicators are a key. and they are meant to capture those pressure points on the environment. So ideally, you'd want this data available for all assets worldwide, I don't know, year-on-year tracking of progress, and actions taking to reduce those negative impact. That's a lot of idealistic
I agree
thoughts.
with you. I agree with you, Helene.
Sorry, Helene, you mentioned the principal adverse impact. Just for those in the audience that perhaps are not so familiar with SFDR, what are the principal adverse impacts actually?
Yeah, I think that's an important aspect of trying to find again a common language between investors and companies, because I think principal adverse impact, even if adverse impact is a terminology that is being used across various frameworks, is part of OECD guidelines for multinational enterprises. But I would say the PAIs is very like a financial jargon that has been introduced specifically by the SFDR, and essentially it's a list of quantified indicators that are aimed to capture a negative impact. I can give an example of negative impact on climate change would be GHG emissions. And of course, you have this list of principal adverse impact that have been sort of put forward by the SFDR regulation that span across different thematics. So you're going to have indicators for water stress, you're going to have indicators for negative impact on biodiversity and so on and so forth. But indeed, there's a problem of just the language that is being used to kind of call those indicators, but they are as important for companies that they are for investors.
Right. Thank you for the clarification. Nils, what do we want from SFDR? What's the ideal situation we want to get to?
Yeah. Now, I agree with everything you said, Helene. In an ideal world, we want to drive uniformity of the data. And as well, I would say to have real-time ESG insights on SFDR, for example, on the PAI. These two aspects, uniformity and real-time ESG insights, are essential to integrate ESG into investment decision making. And we saw it earlier with only financial information, with the previous standardization of IFRS, so the International Financial Reporting Standard. And this has facilitated the cross-border exchange and the cross-border investments by providing the investors with a consistent, comparable financial data framework. And the same will happen with ESG. The same is happening now. And for that, we need, of course, data standardization to achieve this uniformity. We need real-time reporting, and as we say, to allow all the stakeholders to make timely decision and to evaluate all the ESG impact. So it could be GHG emission, as you said, Helene. And then we need a trustworthy platform. We need platform like Sweep that enhance the credibility and the accessibility of this ESG data for both the investors as well as the investee. And those platforms will ensure the data integrity, and it will facilitate as well the interpretation of this data. So our mission at Sweep is to make you love ESG reporting, to make you love SFDR reporting, because we make it easy. We try to make it easy and actionable, because the next step is to take action on it.
Right. So we mentioned data, right? Which I think it's quite important in this case, because I think we are going through a little revolution in sustainability reporting this year with the introduction of all these regulations, and also the new IFRS sustainability standards, as you mentioned as well. So CDP, by the way, will incorporate IFRS S2 standards, the climate standards, into its questionnaire from 2024. But on the issue of data, what are the challenges that have been already identified and acknowledged, in your opinion, Helene?
Yeah, I mean, related to the ideal state of the world, data availability, quality, but also the pertinence of the indicators. So, for example, companies are not yet, widely assessing their pressure points and dependencies, in particular on nature and biodiversity. But for a good reason as well, is that it's very difficult to do that, and there's not one common indicator to assess negative impact on biodiversity. For those indicators that, you know, for which there's more of a consensus, I would say interpretation can differ. There's a bit of a lack of harmonization. And sometimes it's just mistakes in reporting. You know, we have problems with units, for example, and that is something that is easy to fix, but it's still creating some issues right now in the data landscape. And then there's the worst case, that is manipulation in reporting, which then we tend to call greenwashing. But I would say from conversations I'm having, you know, with different stakeholders from a purely access to information angle, there's a lack of centralization of the information. So we have new regulatory requirements, specifically for investors on SFDR, PAIs, and that means that a lot of stakeholders will turn to the same company to ask for the same or, you know, slightly different information. And it turns out to be quite burdensome for companies who already have to deal with, of course, preparing themselves for some of their own regulatory reporting. I think one aspect that is important to highlight is that it can be problematic for smaller companies as well, that might not have the resources to gather this information. And for themselves, it can require a lot of data from their own value chain. So how do you get data from your suppliers? Assessing, you know, the downstream impact of your product, it requires a lot of data, of skills, of resources. And I would say the last point I'd like to make on that is something I find quite important is accountability. So the direct relationship between investors and investees, because there's a lot of estimates out there, and it's good. But because of the variety of you know, data sources and estimates, it can be difficult for investors to engage directly with companies on the basis of information provided. So, you know, if you got that data point from someone, what makes you sort of, what's your argument to kind of put that forward in front of a company? And so this relationship is lost a little bit through that decentralization of data. And yeah, another feedback I got from investors is, of course, the materiality aspect. So not all data points are material for all companies or relevant for all companies. And, you know, how do we get confidence that a certain topic is material for a company, which would trigger engagement, you know, from an investor perspective? So I've had feedback from investors that say we are not sure that we should, you know, talk to that company about that specific impact because we care about the relationship and we don't necessarily want to tell them about their, you know, emissions of pollutants to water if it's not relevant for them. So I think that there's a big gap that needs to be addressed in assessing with more certainty what sort of topic is material for different types of companies.
All right, a lot of good stuff there. And Nils, what are your thoughts?
Yeah, I would like to jump on the detail of practical challenges for the investee when it comes to ESG reporting, and you mentioned it overall, Helene, but it's maybe the first one is time and investment constraint. It takes time to report to your investor, and we see as well some limited resources and small teams. Sometimes a lack of a dedicated point of contact or a business unit working on ESG reporting in small company. So definitely time and investment constraints is a first challenge. Then we see as well the diversity of investor demands. Sometimes an investee can have 1, 2, 3 investors or more, and to be backed from multiple investors can result in a unique reporting criteria and metrics for each investors. And this is a challenge for portfolio companies. This is where SWIP uniformize the reporting. And when you report once to one investor, you have the data already ready to be imported or to be reported to other investors. So this is something really crucial as well. And last but not least, the data collection itself, to go source components or to go collect data on your supply chain is a challenge. It takes time and it's not easy. And this is as well where Sweep or platform can help to collect the data. So just to resume and on what you said, Helene, the three challenge overall for investor and investees to have a centralized, scalable, and adaptable ESG reporting system. And it's crucial to have it to address those challenges.
Thanks, Nils. So within this context, Helene, what can companies do to address these challenges in reporting, such as, for example, a credible materiality assessment, as you mentioned, and gathering this data on value chain impacts?
So aside from reporting, I'd say that both investors and companies should care about this assessment. First of all, because climate change and nature loss are strategic matters. So obviously it will influence the ability of a business to operate, use resources, create value. So it's not just about reporting. And that means that you need to start somewhere. So I think the idea behind prioritization is key. You can't do everything right away. You can't assess everything, but it's about a journey, and that's actually the approach that we take at CDP also when we engage with companies. You know that better than me, Guy, but it's essentially, first of all, thinking about what's your priority, and then setting up data systems so that you can start collecting measurement at material sites, for example, or work with experts that can help you as a company to assess secondary data. Because even if primary data is key, secondary data is needed to assess your value chain. And in the same way that investors need data to assess their investee companies, companies need data from other stakeholders to evaluate their impact or even calculate specific indicators like life cycle emissions. So from investors I work with, I got examples of private equity funds that are working with smaller companies and they need to collect emissions data for their portfolio. So some of them would help those smaller companies to kind of set up their data collection systems in place to be able to run that assessment on their own. It's almost a win-win situation because investors need that data for their portfolio, and in turn, helping a company to set that in place and thus adjust their practices, switch their, energy sources should also help decrease the risk of their investment when it comes to transitional risk or even sometimes physical risk. So I think having those systems in place will create more trust in reported data. If you know that the company has that and is looking at it from that perspective, you'll have also more trust into what they report as being not material. So it's two sides of the same coin, essentially. And it's hard to not mention in the context of CSRD, of course, the need for assurance. And you're going to have an increasing market, obviously, for third-party checks and external assessment to complement a company's assessment of their own impact. So, yeah.
Yeah, it's a whole new world. It's also this concept of double materiality that the Commission introduced. So a lot of companies that have been very used to looking at it from a single materiality perspective. In this case, most companies look at financial materiality as their main source. So they usually look at the impacts that the environment has on their bottom lines, and now they need to start assessing as well the impacts that they have on the environment. So there's a lot of homework to be done in that sense. And in your opinion, Nils, what can companies do to address these challenges in reporting?
Yeah. On the first challenge, the materiality assessment, you need to have a tool that is designed for incorporating the assessment. And after incorporating the materiality assessment, then you need to adapt the data collection processes. And this is easily manageable if you have a tool, and Sweep is designed to integrate this. Then as well, I think company, as you said, Helene, needs to engage with the external consultants for guidance and expertise. And then on the second challenge on the supply chain, I think there is no rule, but you go and you need to go collect the data directly from the suppliers. As you said at the introduction, Helene, as well, there's a lot of estimation out there, but at one point, regulators and the society is waiting to go collect the data from the supplier. And Sweep really tries, or Sweep has been built in this collaboration perspective. Our tool is really here to make collaborate the investor and the investee, and the investee with his supply chain. So we think that data collection and ESG data is something that it needs to be collaborative. And this is what we try to tackle at Sweep every day.
Right. In that context, what are the main considerations a company should make to disclose accurate and investor-ready PAI data, especially given their need to disclose under CSRD right now? Perhaps to reverse a little bit, Nils, you want to start?
Yeah. On the disclosure of PAI and then it says there, CSRD, we really need to see it as SFDR and PAI is a first step, and then CSRD disclosure will come next. So this is what we see with our customer. They take this first ESG PAI survey as a first step. And then, of course, we have question on CSRD, we have question on more custom ESG indicators that company wants to track. But overall, we need to have in mind that we need to maintain transparency and accuracy for both the investor that needs to read the data. And then, as you mentioned, Helene, as well earlier, we need to have auditable data. And this is easier to have it on a tool than on any Excel sheets. So really, transparency and accuracy of the data will be the challenge to CSRD and SFDR, of course.
Helene?
Yeah, I don't have much to add on that question, but I would just kind of highlight or like mention again something we talked about, that is having a common language, because essentially I think the way EU sustainable finance regulations sort of emerged was in an interesting order. So first, SFDR means investors put their focus on PAIs, principal adverse impact. The taxonomy came after, and a lot of investors, depending on the type of investors, are not really fully looking at the taxonomy yet because they've been so focused on PAIs and satisfying their SFDR reporting. And when you talk to companies, it's actually the other way around. So in a lot of cases, they don't really know what we mean when we talk about PAIs. And they've been really focusing on the taxonomy, which is a huge piece of work for companies to measure and report on. And CSRD comes later, so they are now starting to look at and prepare for it. But this concept of the adverse impact, how to assess certain data points and whether they are material or not, is almost kind of now they're starting to think about it. So I think leveraging these needs from investors, as Nils, you said, to kind of help companies start somewhere and say, okay, those are the indicators. By the way, they are at the table at the end of ESRS 2 general requirements. Please don't forget about them. But making sure that there's companies' uptake and adoption of those specific indicators, perhaps even to help them do their materiality assessment. So, for example, how do you assess that you're material or not for the pollution sort of topical standards, where you can start measuring and assessing, whether you are, emitting certain types of pollution that are part of the principal adverse impact indicators. So again, kind of making sure that there's this bridge, between the pieces of regulation and the indicators that are important across the board, I think is really important. And yeah, apart from that, from a corporate reporting perspective, accuracy. So again, paying attention to units, following recommendations in terms of what should be included in scope of the indicator. What business lines, is it, ownership via operational control, financial control, but follow those recommendations to make sure that for a data user, you can sort of interpret data in similar ways when you look at different sort of companies in the same sector is really, really important.
Still on this topic of PAIs, and sorry to put you on the spotlight there, Helene, but I think you did some work on PAIs and mapping them to the CDP questionnaire. Do you want to talk a little bit about that?
Yeah, so I mean, we are basically so working a lot with investors to also help them basically, collect data, but also engage with companies in the context of SFDR and principal adverse impact, and typically collaborating with platforms like Sweep that really aim to achieve the same objective. And so we have essentially mapped the CDP questionnaire to the list of regulatory indicators and sort of made sure that we have as much coverage as possible, specifically for the indicators where data is very scarce. So a lot of progress has been made on GHG emissions, but of course there are certain things that investors need to report on. For example, tons of emissions of pollutants into water, or sites of operation in biodiversity sensitive areas, or things that, fundamentally there's not a lot of data available for investors there. And so in turn, we kind of try to drive engagement with companies to help them prepare for their materiality assessment, their reporting for CSRD, and sort of improve the quality and quantity of the data.
Right. So CDP providing a data that was kind of unexistent in the market there. So Nils, what are the potential and existing solutions for this landscape?
Of course, technology and softwares like Sweep are to simplify, and I think they are the solution for ESG reporting for both the investor and investee perspective. And this is as well how we work and how we created our product is to leverage automation thanks to AI. Of course, we talked earlier about it to foster collaboration between companies. And we try to focus on user-centric design when it comes to Sweep to propose the best solution on the market to go gather this data. And as you said, Helene, this data is not easy to gather, especially in the private markets. So about AI and automation, by deploying this in the tool, we can streamline data collection. We can reduce human error as well. You mentioned it earlier, Helene, but this is something that is really important, and this is where we can help. And at the end, we provide actionable insights for companies. Then the platform is collaborative. You will see it really soon as we're going to do the demo. We try to create a collaborative platform where investor ask data to investee, and then the data is communicating between these accounts. And interaction is key. And this will lead as well to the standardization of the ESG data. And then, as I mentioned, the user-centric design, it's really important for the users that a platform needs to be intuitive, especially when it comes to ESG and all the complexity behind. And Sweep is trying to create this intuitive environment. We provide user with guidance, with expertise, with predictive analysis as well, and last but not least, easy to digest insights. And this is key as well to make those insights actionable. So I'm happy to present you the demo maybe. Guilherme, what do you think?
Maybe just shortly before we do it, I would pass the word to Helene so that she can also comment a little bit on the potential and existing solutions?
Yeah, or I would like to comment on something Nils just said about the actions taking. I think it's a really important point that I forgot to mention that I think is really worth highlighting is that, collecting information on negative impact, there's not one investor I talked to that said it would lead to, immediate disinvestment, quite the opposite. It's really about kind of understanding pockets and areas of risk, and facilitating sort of progress and actions taking to address that risk. And I think it's very important in the context of transition finance, and there's really a role for investors to kind of fund this improvement and these changes that corporates want to make. So I think indeed having data to make decision and highlight pockets of risk is then in turn used to foster this collaboration and the transition from happening. But I think in terms of existing solution, maybe I think we are seeing a lot of progress on common interpretation of regulations. We are starting to have data coming through so we can analyze it, we can see dispersions, then you can have guidance from policymakers or industry associations even. I would just say there's still a bit of a risk that different countries interpret regulation in different ways, specifically within the EU. We're seeing this a little bit, but I would say that's a much broader topic than that. It's a global governance sort of issue, but I think it's something worth highlighting. And other than that, I really believe in tech solutions. So I think we need tech solutions. There's a lot of technologies already out there, powered by data that can really help, whether it's investors or companies, to identify those pockets of risk and make some changes. So yeah, perfect for the demo.
Yes, there you go, Nils, please.
Yes, so I will try to make it quick because we only have like 10 minutes. Then we would like to maybe open the floor to questions. And I see in the chat that there is some questions. So let me share my screen again. So maybe we can open the floor to questions.
Right, I feel like there's quite a few here, so I'm happy to select some. So maybe perhaps because we just did the demo, I think this one's quite relevant for you, Nils. There are many different platform vendors, including Sweep. If companies use different platforms, it's very burdensome for multi-client companies. How can companies and industries streamline between all these different platforms?
We try at Sweep to make the investor to propose their investee to use Sweep as well. We see this topic coming quite often of having different platforms for ESG reporting or carbon reporting. At Sweep, we try to combine both. We succeed actually to give a tool that are calculating carbon emission and to calculate and to report ESG indicators. So when it comes to pushing for Sweep at the investor level, we try to give commercial maybe discount for all the portfolio companies. We have some network effects going on with some of our customers, and we're happy to have some investors that push for the use of Sweep at the investee level.
Helene, do you want to comment?
Yeah, I think it's a very good question, and that it's a very big issue. Very big in the sense it's positive because it shows that there are innovation and solutions that are being proposed, but obviously it's also an issue at the same time because of the fragmentation. And I think here again you have, I would say from the technological perspective, you have some solutions to address that, which is APIs and how can you sort of transfer data from one platform to another. Collaboration. So typically the one that we have today, it highlights that there are complementarities between different form of platforms and different added value, and hopefully little by little there's going to be a consolidation of what can be consolidated, and really you keep the added value from the different sort of platforms or participants. But yeah, I think to me, APIs is one of the big topic at the moment. And from a regulatory perspective in the EU, obviously there's the ISAP, so single access point, which is far from being, like to the level of having an integrated reporting platform that companies can fill out online and stuff. But I would say the ambition is probably to have this one place where everything is gathered. And here again, you're going to have those platforms that have to reconsider, including CDP. Okay, then how do we share data between the different sources? And do we still want to collect something that is already, provided in this gigantic publicly available data set? So it's very good considerations to start thinking about.
Yeah. Nils, we saw there, for example, in your demo that there's some estimatives embedded within your tool. So one of the questions that came up is, how do you ensure the accuracy of the data?
When it comes to estimation, for example, on carbon estimation, we have an internal methodology. First of all, we base our estimation on CDP database. And then we take mainly two information. We take the activity, the industry, so the sector activity of the company, and then the revenue. And internally, we have a methodology of removing outliers, taking a median of it. But then when it comes to gathering data outside, we can as well create some data quality checks in Sweep. Of course, AI will help as well. For example, if we have just not relevant or just outliers in the data that is reported from the investee, for example, AI can tell you in the app, there's something to double check here. Anyway, when we collect data into Sweep, there's always a check before submitting the data into the platform. And this is as well a first step of having a data accuracy quality check.
Right. Any comments, Helene? This was very specific, right? Yeah. For measuring GHG emissions, there are different methodologies such as the GHG protocol, bill and carbon, among the others. In this jungle of different carbon emission factors, what is the best practice? Does CDP promote a specific database, Helene?
Yeah, that's also a good question. I wouldn't go as far as saying that we promote one of them, but I know that the process followed by CDP specifically to give guidance to companies reporting. So for those who are not familiar with the CDP questionnaire, there are also extensive guidance available actually on the website that anyone can check, that gives a lot of sort of information on all of the different protocols and the sort of tools that companies can use to assess a specific data point. So typically for GHG emissions, you would have essentially what CDP has identified as being sort of accepted, acknowledged, and trustworthy sources. So I would suggest to kind of have a look at that, because it's not going to be all of them. It's some that have been assessed as being sort of validated, sort of. But I would say we have a quite close collaboration with PCAF. So we've done a webinar not so long ago between CDP and PCAF, and typically PCAF, I think, has quite an extensive emissions factor database. So it's a more practical answer.
To complete your answer, Helene, we work with PCAF as well. So CDP estimates, of course, and PCAF methodology is behind the Sweep methodology. So, yeah.
Yeah. I think Helene touched an important point that I think, especially for companies that are sort of starting their environmental journey, reporting to CDP is really helpful, because we not only we ask companies the questions, as we also provide the guidance material for them to answer it. So I think that's an important part of the journey that CDP has been developing for over 20 years, this methodologies. And I'm happy to jump on that one as well, and to say that in general, for GHG reporting purposes, the CDP usually uses the GHG protocol. So for scope 1, 2, and 3 accounting, that's what CDP has been using for the past years. So if you want to start, you can start by reading the GHG protocol. Another question would be, and I think this interesting question on my side, I would know, maybe Nils, you would, will CDP data eventually feed into the CDP questionnaire, or vice versa? Would the CDP questionnaire data feed into the CDP system? I think you talked a little bit about how it does. So
yeah. At Sweep, we have the CDP questionnaire template. So investor can just select it in the template survey template, sorry, and ask the investee the survey. And then about communicating data from Sweep to CDP, we don't have a proper model, but this is something that we do with some of our investors. They just extract the data and give it to CDP. So yeah, it's something that we do.
There's another question here that perhaps Helene can talk about. Are materiality assessments required for SFDR PAIs?
Unfortunately, not right now. And I think that sort of raised the question of now that the CSRD and ESRS have been sort of published and close to be adopted and implemented, there's the acknowledgement that not all of those data points are material for all companies, but so far investors had to actually collect them and publish them and calculate them for all of their investment, including for companies that might not be material for a certain PAI. I believe that will change. There's a revision of SFDR that is upcoming. There's a consultation happening right now on SFDR level 1 with a deadline in December. And I think naturally there's going to be an evolution of if a company reports being not material for a certain themes or indicator, then of course, why would investors have to kind of come up with the data on it? So I believe that this is the direction of travel. Interestingly, in SFDR, you also have a specific requirement for investors to explain how they identify and prioritize adverse impacts, which, I mean, in my view, just comes down to the same thing as materiality assessment. But yeah, still, I would say some evolution going on there.
Interesting question that came up. Can you tell us where to find the best guidance for estimating GHG inventories for debt funds, private equity funds that invest in CLOs, CMBS, and other loan pools?
I think PCAF will be your friend. The methodology is detailed by asset classes. So you could go for listed equities, unlisted equities, motor vehicle loans, mortgages, and PCAF is really the framework that is mainly used when it comes to GHG accounting for investments.
Helene?
Yeah, I would echo that. I think there's obviously some issues for certain asset classes for which you know the methodology hasn't been fully fleshed out. So clearly there's a need of practitioners and experts to sort of create industry level guidances on that. And that includes probably also assessing what's the best sort of data source. But I think there's, from my knowledge, there's a lot of progress that have been made, but of course it's not gonna cover the entire set of asset classes yet.
All right, and just to finalize, I'm happy to jump on another one here. CDP is single materiality like ISSB and TCFD, correct? Incorrect. So how CDP covers questions of CSRD, since CSRD is double materiality? Actually, CDP has a holistic approach to materiality. So we do encourage companies to use the double materiality concept, as we said in the beginning. So analyzing both the material impacts that your company has on the environment as the environment has on your company. So we highly encourage companies to take that double materiality approach when answering to the CDP questionnaire, as we do consider this to be the best practice in terms of environmental reporting. And with that, I guess I'm happy to finalize as we approach the hour. So thank you so much, Nils and Helene, for your participation today and for sharing your thoughts. And yeah, we keep in touch. Thank you. And for those of you that are interested, we do have a webpage at the CDP website called the Sustainable Finance Webinar Series, where you can watch some recordings from previous webinars that we did on a series of different themes within the EU Sustainable Finance regime. So if you're curious to learn more about the CSRD regulation, we have a webinar on CSRD, EU taxonomy, so on and so forth. So please do enter it's at the very entry of the CDP website. You will soon spot it, the Sustainable Finance Webinar Series. So thank you so much, everyone, and have a nice day.
Thank
you so much. Thank you, Helene. Thank you, Guilherme. Have a good day.